Right then, so covering some of these pairs, we are looking at the euro here. Well, we've got this US dollar, you've got this M formation, you've got prospects here of a move to the downside. Of course, we've got the FOMC minutes coming up today in the afternoon, but we've got plenty of time before then. We've just had a batch of data come out that's moderately positive for the US dollar, and we've seen a bit of a tick up, but nothing significant. And that is simply giving us a move lower, or it did. We've just turned the hour, have we? The last 20 minutes. In that euro dollar to the lows, and we created a fresh low, so just extend that box lower. Um, Now, as I said in the prior meeting, for those that attended it, once when we see these sort of steep moves down, you'd expect the correction um, to pair back into that move. So that's what we're seeing here, and we're starting to move up, if you like, in level one. We've got level two, level three. So this is a dump and pump scenario. So we've dumped and we're looking for the pump, right? So we're looking for the pump up into that short, right? That's on the hourly chart. And however you engage with such a thesis is down to your trading style. But for me, I'd be looking on the lower time frames. I'd be marking up my charts with reference to the bear trend that we're currently in. I'll be looking at the highs and lows, the recent made highs and lows. So I'm looking at the recent swing high in this 5 minute chart, which is here. Um, so 109.17 that appears to be. I've got that marked correctly. All right, so in fact, let me just clear up this chart entirely and let's do that properly for you. So we've got this trend line resistance. We haven't broken any structure, so it remains as resistance. We've got this swing high 109.17. If we're going to come up and penetrate that, then that could be the fuel or the catalyst for us wanting to partake in a potential long position. We might want to be buying low to catch a higher reward on our risk. And if we're targeting perhaps, say, the highs of the day or wherever we feel, and you can look at volume profile, which is already marked here on the left as part of my template indicator, which you can find in the education section. So you've got the point control potentially acting as a support base. You've got this move up into a higher volume node over here. So if I just mark that up for you, then perhaps we're going to find resistance in this area. And if we do, then perhaps we're going to come back down towards our higher volume node and support area in here, which is where we can be catching the price at a discount. And then if the thesis is correct, and we're going to move up into these shorts, then we can expect the price to move up, potentially to target last week's lows. If you're just looking for a day trade, you want to be in and out. You've got potential resistance up there then. Right, so that gives you an over a 3-to-1 risk to reward setup. That's just an example, not advice, not necessarily something that I'm going to partake in. I'm essentially just giving you some analysis and what you might be able to do with it. So looking at the Canadian dollar, let's back this up. Oil prices are going to be important in this regard. Now, we had a big sell-off yesterday, right? So maybe we're going to move up into those shorts, and that will indeed fuel the bearish bias that I've already marked up here. We've got this pump up. We've got this M formation on the chart, right? So we're moving up into that resistance, and maybe we're heading lower for the move in the Canadian dollar. So moving swiftly over to dollar yen. We've got this pump and up scenario. We're coming up. We're making fresh highs here for this cycle. That'll be interesting. Oh, not quite, but we're getting there. Right. So we're coming up into yesterday's low high. Right. So we're nice and high for a great opportunity to be shorting dollar yen, potentially depending on the outcome of the FOMC minutes. So we might see anything dollar related moving into consolidation. And if that's the case, then great. Then we'll have our levels to be shorting in later in the day. So that comes out around about 2 o'clock time, well, bang on 2 o'clock time. So maybe that'll be the move around 2 o'clock. We don't know, but it's a thesis. Moving over to the Aussie, we've got unemployment. We've got unemployment data coming up tonight, so that's going to be very important, right? So uh, bear with me. See if I can get any spiel around that for you. So we've got TD Securities. I like to use TD Securities, and of course our own analyst, but just for a quick reference point. Uh, They're expecting jobs growth to pull back after the strong print over May and June, right? Um, so in that respect, we've got this W formation, and we're coming into the point of control in yesterday's closing price pretty firmly. So this dollar's picking up as I go through these pairs, which is fine by me. I'd like to see a lower price to buy low and get involved with a bargain if this dollar is indeed going to weaken off. So we could have a scenario here whereby the price moves up, potentially on dollar weakness over the FOMC minutes, and maybe we get up into level 2. We start testing last week's highs, right? We start peeling off from that resistance area, so we get this sort of scenario. So we move up, peeling off into consolidation, and then we get the labor market data just after the Tokyo Open, right? So say we're peeling off here, Tokyo Open, we come up into the data. Let's do this properly. So you've got that W formation. Right, so we're looking for a move up in the US. Maybe we'll start petering out up into Tokyo Open, waiting for this data to come out. If it disappoints, then maybe moving back down, or if it comes in line with expectations, or uberly bullish, then up we come in the Aussie. So wages will be important in that data. So we're looking for higher wage inflation outcomes from the data to propel the Aussie even higher. All right, and then looking over at the US 30, we've got a market here that was sold off heavily. It's moved into consolidation. Are we trapping volume for the squeeze? Are we going to get a day 3 squeezer? So we've got day 1, day 2, day 3 typically can be a move against the week's balance in terms of shorts and longs. So we've got shorts in the market. Are we going to get a short squeeze? Right. So that's the prospect. Again, that could come off the FOMC minutes. They could be uberly dovish, and therefore dollar weakness, risk on, and a move up in the indexes. Same scenario for the NAS and the S&P there. All right, and then on to gold. Similar scenario for gold. If we get a risk on profile for the day, born out of the FOMC minutes later in the day, or if we start building on that early doors. I mean, at the moment, doesn't seem to be. Um, we've got a consolidated market at the moment, but let's see if we can get a burst of energy at some point, which could see a move up in the gold price. Not to say that's going to fly all the way up into the 50s, of course not. I mean, the daily ATR is about $20. So $20 would take us from today's low up into the second level and up into Friday's highs. So Friday's highs on the radar. If there were to be fireworks today, um, and that could be a real prospect if we can get over 1913. It's a swing high level. So 1911, 1913 is the near-term target. So maybe we'll get a go at that in a break up. All right, so we've looked at the majority there. Yeah, we'll leave it there for the top. Well, we'll look at one of these crosses, sterling yen. Sterling yen continues to fly high. If we're going to get dollar weakness, depends really what happens there in cable. We'll look at cable next. Right, but we've certainly got to move up, a strong move up here. We're moving into consolidation. We're at the highs of this cycle. What goes up must come down scenario, or what goes up is going to stay up. We just don't know. But based on that, I'd be looking for a short pullback for a move into the shorts. We've got yesterday's highs as a potential support area. If we were to draw a Fibonacci on that, just to give us a gauge for where we could be targeting that, yeah, you've got that 185.30 meeting the 38.2 correction area. So beware of that if you are shorting. Price and balance over here to target around 50%, and then you've got the 61.8 meeting prior highs and a move below there. You've got price and balance to test the neckline of that W formation, and yesterday's closing price 184.80s. So moving that up into here on the watch list, and let's look at cable then. How are we getting on? Cable is pulling back, breaking structure. Day three, Wednesday. Right, so what we're having here is a pullback into this length, targeting the 6318 with the price and balance to go for. And then if we get that move, perhaps we're going to fly up higher with a target. Let's take it from the 61.8. $127.80, aligning with prior highs. That's a focal point for the bulls. So prospects of a move up if we get that dollar weakness coming in, and a continuation of the trend in cable, potentially setting up for later in the week for the capitulation of the bulls back into the low 127s perhaps. But for the day ahead, that's what we're looking at. looking like for now. Um, and that would potentially leave sterling yen balanced at around that 185.30 level. If we're getting strength in the pound as well as the yen due to dollar yen selling off, then you'd expect sterling yen to be relatively supported in around 185.15, 185.30. So we're getting this sort of. Okay, so we'll leave it there for now. Good luck out there, guys, and I'll see you on the other side of the FOMC for the market breakdown, closing bell watch list, looking ahead for what opportunities we might have for Thursday. Remember, in terms of the New York session, we're going to have most activity, most probably around the Wall Street Open. Um, so let's see if we don't get what we're looking for. Maybe we'll get that shun to the downside around the equities hours, starting to make a move in the dollar ahead of the FOMC minutes.